If you are wondering what car tax you owe for your car, you need to watch this.
£1,000. Imagine getting a bill for that amount, all because of a single, overlooked letter from the DVLA. It sounds a bit crazy, doesn't it? But honestly, a simple administrative slip-up can escalate into a really expensive problem faster than you'd think. So, to help you navigate these tricky waters, we've put together this essential guide. And we've done it with one of the UK's most trusted accounting firms, My Tax Accountant. Their expert tax advisors have helped shape this whole discussion to give you the clearest, most up-to-date information for 2026. So, here's our plan for today. We're going to start with that unexpected letter, then look at the annual tax check. We'll cover some common paperwork pitfalls, the uninsured vehicle trap, and what happens when the clamps come out. And we'll finish up with a super simple checklist to keep you on the right track. Right, let's start with that dreaded brown envelope landing on your doormat. You know, it's incredibly easy for a simple oversight, maybe a payment reminder you missed, or forgetting to update your address, to turn into a formal penalty. A lot of people just don't realize how automated and how fast this whole process is now. Okay, let's break this down because the details really matter here. Just being the registered keeper of an untaxed vehicle kicks off with an £80 penalty. But look at this. If you're caught actually using it on the road, that can jump all the way to £1,000. And notice that third one, failure to notify a keeper change. That's just a bit of admin, but if you forget, it carries the exact same £1,000 maximum penalty. Let's move on to the big one, the annual vehicle tax. This is really the cornerstone of DVLA compliance, and it's something every single vehicle owner in the UK has to think about. So, what exactly are we talking about? The official name is Vehicle Excise Duty, or VED. Now, the key thing to get your head around is that it's a tax on ownership for any vehicle that's used or could even just potentially be used on public roads. So yeah, even if your car is just parked on the street outside your house, it needs to be taxed. And this really shows you the scale of it. From the family car on the school run to a small business owner's van in Birmingham, pretty much every vehicle is covered. The amount you pay isn't fixed either. It depends on things like the type of vehicle, when it was first registered, and of course, its CO2 emissions. Now stay with me because these upcoming changes are really important. The rules have been changing. For new cars registered after 2017, the system switched to a first-year rate based on emissions, and then a flat standard rate after that. But here's the big one. From April 2025, the VED exemption for new electric cars is ending. And then, from April 2026, the expensive car supplement for new EVs, that's the extra charge for cars listed over £40,000, will see its threshold rise to £50,000. This catches a lot of people out. And here's why it's such a big deal for the government. VED brought in a whopping £7.7 billion last year. Now, there's a common myth that this money is just for roads. It isn't. It goes right into the central pot for all public spending. Think hospitals, schools, the whole shebang. So here's a question for you. Do you think your vehicle might be exempt? A lot of people just assume they are, or maybe hope they are, but the rules are very, very specific. Let's take a look at who actually qualifies. Here are the main categories for exemption. You've got vehicles used by a disabled person, historic vehicles that are over 40 years old, and things like agricultural vehicles. But, and you'll really want to hear this part, even if your vehicle is exempt, so the cost is zero, you still have to go through the process and tax it every single year. Just doing nothing is not an option and will land you a penalty notice. Okay, on to one of the most common and, frankly, easily avoidable mistakes, keeping your details up to date. It sounds so basic, doesn't it? But this simple admin task trips up thousands of drivers every year, and it can be a really costly error. And the consequences are no joke. Forgetting to tell the DVLA that you've sold your car or moved house, or even that it's been scrapped can lead directly to that £1,000 fine. The thing is, until you officially tell them, you are still legally responsible for that vehicle and any fines it might get. The experts at My Tax Accountant have a fantastic piece of advice on this. Here's their tip. The second you sell a vehicle, get online and tell the DVLA. It's instant. If you just pop the V5C logbook in the post, that little delay could be enough time for the new owner to get a parking ticket, and guess what? That penalty notice will come straight to you. Next up, the uninsured vehicle trap. In this day and age, technology has made it almost impossible to slip through the net. There really is nowhere to hide if your vehicle isn't properly insured. Let's have a look at how they do it. It all works through something called continuous insurance enforcement. Basically, the DVLA's database is constantly talking to the Motor Insurance Database, or MIB. The system automatically cross-references them. If it finds a vehicle that is taxed but doesn't show up on the insurance database, bang, an enforcement letter is automatically sent out. It's all done by computers 24/7. And the financial risk here is very real. It starts with a £100 fixed penalty notice. But if you ignore that, or it ends up in court, the penalty can shoot up to £1,000. So the bottom line is, unless your vehicle is officially declared off-road with a SORN, it has to have valid insurance, period. Now we get to the really sharp end of DVLA enforcement. This is what happens when letters and fines are ignored for too long. You'll want to hear this part, because seeing a wheel clamp on your car is a stressful and incredibly expensive experience. Let's just break down these costs, because these spiral incredibly fast. Right off the bat, there's a $100 fee just to get the clamp taken off. If you don't act fast, your vehicle gets towed to a pound. That's another $200 fee. And on top of all that, they'll charge you $21 for every single day it's kept in storage. And here it is, the final stark warning. If you don't reclaim the vehicle and pay all the outstanding fees within about a week or two, the authorities can literally dispose of it. That means it could be sold at auction or even crushed. You could lose your vehicle completely, all over an unpaid tax bill. Okay, after all those serious warnings, let's bring it all together in a much more positive way. Here is a simple, practical checklist to help you stay compliant and avoid all of these headaches in the first place. Think of it as your proactive game plan. Here's your 5-point plan for total peace of mind. First, your vehicle has to be either taxed or have a SORN. There's no in between. 2, keep an eye out for those V11 reminder letters. 3, update your details online the second they change. 4, keep it insured unless it's got a SORN. And 5, a great tip, before you buy a used car, use the free DVLA online service to check its tax status. And let's end with this one piece of brilliant, straightforward advice from the team at My Tax Accountant. It's simple. Be proactive. Don't just wait for the official reminder to land on your doormat. Set your own reminders on your phone for your tax and MOT due dates. Seriously, a few minutes of planning can save you a world of stress and a lot of money. Right, just a quick and important note before we finish up. The information we've gone through today is for general guidance, and it's current as of February 2026. Tax laws can and do change, so please don't take this as a substitute for professional advice that's tailored to your own situation. If you do have specific questions or need some help, we highly recommend you get in touch with the experts and consult them before taking any action. You can reach My Tax Accountant on 020-8570-8531, or you can drop them an email at info@mytaxaccountant.co.uk. We really hope you found this guide helpful. If you did, why not subscribe to the My Tax Accountant channel? They've got loads more clear, practical advice just like this, all designed to help you stay informed and in control.